Welcome to Markets Now. I'm Michelle Rook with Ted Seifried, Zaner Hedge. A lower day in livestock grains, ending mostly to the plus side. And Ted, let's talk first of all about the soybean market. We've seen a lot of resilience there, but we're up into some resistance areas again. Can we keep that market going and get through those areas, do you think?
Yeah, I mean, that's a really good question, Michelle. 1081 and a half is a big level of resistance for the July beans. We got pretty darn close to it here today. Whether we can extend to it to the next level of resistance, which is that 1105 area or even the 1125 area, that's a really good question. I think when we think about soybeans longer term, I think there is a potential bullish scenario for new crop, as we saw from the USDA's report on Monday, and that's mostly coming from the lower acres. But I think it might be a little bit early to get too excited about that. I mean, we've seen how much the USDA's estimates for the next marketing year can change. I mean, look at corn from last year. Their first estimate on this current year's corn carryover was a 2.2 and change billion bushel carryover. We're at a 1.1 or we're at a 1.415. Obviously, that can change a lot. I do also wonder if the very fast pace of planting in soybeans is going to bring more acres. Historically, when we're planting this quickly, we do end up with more acres. And this year, I think soybeans would be the one to be the main beneficiary of more acres because of the price of inputs,
Right.
because of lack of fall field prep for a big increase in corn acres, um, and for just what the prices of corn have done over the last month and a half. So I want to be bullish soybeans. I do worry that the near-term fundamentals might still be a little bit negative. Meal demand seems to be a bit sluggish right now. And while soybean oil has really done its best to pick up the baton, it's not the main driver for why we crush soybeans. It does help the crush margin, but I worry about the Brazilian crop. They should really be taking over for the world's number one, export market. I'm a little skeptical on the soybeans, but if we were to see some extended strength in corn and wheat, that might help out. Maybe the funds get more interested. I'm kind of neutral on beans at the moment, but I'm very curious and interested to see what happens with corn, especially after today.
Yeah, corn and wheat, obviously a little bit of an anchor there, but do you also need some more constructive China developments on trade in order to get past 11 as well, or not?
Well, there's been speculation or rumors that China might come in just like they did last time and make token purchases. I mean, not token in the amounts, big amounts, but that's like a show of good faith, and come in and make purchases for soybeans, and potentially corn as well. If that happens, that will certainly add some strength to the market. But I would imagine that those purchases would be for new crops. So we'll see. We do need to get some. We really need to get some new crop sales on the books because we are, although it's picked up a little bit to Pakistan even. We really need to play some catch up on our new crop soybean sales. So we'll see. I mean, that can be good news, but I think the majority of the good news has already been factored into the soybean market over the last few days with a dramatic cooling off of the trade war with China. So yeah, I think that could be a limited effect going forward if those purchases happen. Otherwise, yeah, like I said, I mean, that near term big push to the upside we had that might already be past us.
What about corn and wheat? You mentioned that they've been anchors on the market. Do you think that this market, the reversals that we saw in corn and wheat off the lows, are those bottoms? Can we build on that or not?
Maybe. One day doesn't change a trend necessarily, Michelle, but corn has gotten really oversold. That July, December old crop, new crop corn spread has gotten really oversold. Relative strength indexes interday reaching into like a 25%, which is really oversold. I'm also going to say that both the flat price corn chart and that spread chart look similar to when we put in our lows on the first trading day of March and then had a pretty decent recovery after that. So I think the technical setup is there for a bit of a bounce. We also have the seasonality that would suggest that we could start to move a little bit higher as we get a little bit worried about weather and build in a bit of a weather premium once we get past about 50%, 50 or 60% planted, which is where we're at. So I want to be optimistic for corn, But I'm also going to say that that capitulation in that July-December spread
Yeah.
also might be suggesting that there is something afoot and that the USDA's balance sheet might not actually be quite accurate. It seems to me that there might be extra corn bushels out there. Either that feed and residual category might be overstated and there might be some bushels coming back on, or potentially last year's production was cut too aggressively by the USDA, and that might show up on the September 1st quarterly grain stocks report. Excuse me. But you know, I really can't say for sure that that's the case, but it does feel like, when you had a spread that was trading at about a 45% inverse that went all the way down to a carry and then bounced back from it, that it just doesn't seem to jive with the corn market fundamentals. I will say that, go back to that last quarterly grain stocks report. A lot of the corn was in the hands of the end user, so there might not be this big need for end users to come in and grab corn between now and the end of the marketing year. Um, so there are some reasons why that spread should have come down a bit. But if we are worried about long-term weather prospects and not getting to that 181.5 national average yield, which, by the way, only would give us, according to the USDA, a 1.8 billion bushel carryover, well, the market should be trying to bring as many of those old crop bushels into new crop as possible to add a bit of a cushion for that weather or for those weather concerns. So you would think that that spread should be trading at an inverse, maybe somewhere between 15 and 25 cents. And for the fact that it broke down as much as it did, kind of makes you wonder a little bit.
Was the bigger Brazilian corn crop, the fact that we had wheat hitting new contract lows, maybe going into the feed ration, did it also pressure that spread?
Yeah, absolutely, absolutely. Yeah, because again, like go back to that feed and residual category on the corn balance sheet, wheat might be stealing a bit of that. So maybe might be sorghum, by the way, as our sorghum export program has completely fallen apart. And yeah, that Brazilian second season corn crop did get bumped 4 million metric tons as well. So they will be more competitive on the market as they get into harvest too. These are all factors as to why that spread broke, why corn broke. But I think most people would say, most analysts would say that spread broke a lot further than what that relatively tight old crop balance sheet would suggest is possible. So again, I think you have to be on the lookout for some changes coming to that. Maybe not next month, but by the time we get to the uh, September 1st quarterly grain stocks report, which represents our final carryover number, basically.
So is the wheat bounce just short covering, in your opinion?
I don't really have a whole lot to say that there's a lot of fundamental reasons that or fundamental spark for wheat to go higher. I could make an argument that wheat is fundamentally undervalued, but I didn't see any sort of spark for that. Yes, we're very oversold. We hit the bottom end of a downward trending channel. Technically speaking, we were due for a bounce, so I think that has a lot to do with it. But a little bit of strength in corn, I think, goes a long way for wheat as well. So I don't know. We'll have to see with conditions improving, and the wheat crop tour going on right now, finding some pretty decent wheat so far. Again, I'm not seeing that fundamental spark to really give us an extended rally or to get the funds excited about being long. But if we can
Okay.
break some technical resistance levels, that might change the story.
Some big losses in the cattle market today. Was that just correcting our overbought status? Was it routine profit taking?
Well, there's a lot of fundamental, or I'm sorry, there's a lot of technical reasons why cattle could see profit taking, and that could have happened at any time. Venturing into record territory, the August feeder cattle contract, got up to almost 308, and we were very, very overbought. So due for a correction, due for some corrective profit taking, but also you had box beef prices come down a little bit. However, it was a massive key reversal, and not only did we close below the previous two sessions lows, we also closed that gap, and I'm talking about August feeder cattle, closed below that gap, which bull markets get into gaps. They don't always fill those gaps. Now, all of that being said, I counted 6 key reversals happening on that August feeder cattle chart. So key reversal has not been indicative of a high in that contract. And feeder cattle don't always trade perfectly technically like we want them to. So not 100% sure, Michelle, but I will say that the market does seem to be getting a lot more worried about what happens if that New World screwworm does cross the border into the States, and Texas in particular, and what that would mean for cattle. And I think those concerns are kind of filtering into the market a little bit more. And I think this time, this key reversal might have a little bit more weight to it because of that situation.
All right, and the hog market's a back and fill today after we hit some chart resistance there. June couldn't get above the $100 mark. Is that the problem with that market or not?
I mean, hogs had gotten really overbought too. I mean, what a dramatic turnaround we've had since the middle of April or early April. I mean, we were kind of straight down there from the beginning of February all the way through early April, and then straight back up. We even left a gap on the chart, which at some point you wonder if we'll technically want to go back and fill that. Probably, I would think. So yeah, I think just a little corrective action. Although it is supported that we were able to close well off the lows here today,
Yeah.
and fundamentally it's hard to be terribly bearish on pork, especially now that it seems our relationship with China is better. Pork might be the biggest beneficiary of that because it doesn't have the same sort of seasonality and competitiveness with South America that, say, soybeans do.
Yeah, and we're also hearing of some disease issues, so we'll see how that pans out. All right, thanks so much, Ted Seifried, Zaner Ag Hedge. That is Markets Now.